All right, hello everyone. Good evening. So welcome back to Portfolio Fridays or Portfolio Cash on Fridays with Terence over here. Now I took a week break because I was not feeling well. All right, so thank you very much for your well wishes in the Facebook group itself. All right, I appreciate it very, very much. All right, and I do apologize for missing out on 1 week. Okay, but we are now back together. Right, so let's look at what the market has given to us. Okay. Now, so once again, all right, before I start the session, okay, if you are here with me right now, just drop a note, say hello, right? It would be great to know who's joining us today, all right? And also, if you're joining us for the first time, you can see a banner on the screen which says, all right, streamyard.com/Facebook, right? It'll bring you to a pop-up website, okay, and you'll see a Facebook button in blue, right? We'll need you to click to approve Facebook so that we can see, all right, who's the profile that is leaving the comments, okay? Because we're using a third-party software to do the Facebook stream, all right? So we need you to do this step, all right, so that you will appear under your Facebook profile, okay? Now, so thank you very much. Hi, Sunny, all right, good to have you here. Hi, Eileen. Hi, Derek. Hi, Jason. Hi, Jimmy, as usual, all right? And hi, Jennifer, Florence, and Isaac. Okay, awesome. Thank you very much. All right, and let's get our session started. I think we have quite a few trade management to be looking at now. But once again, before I get moving as well, all right, just the standard disclaimer, right, that I will be talking about my own personal opinions and my personal trades that I'll be executing and also taking off the portfolio itself, right? But by no means is this any form of recommendations or suggestions that you should be trading. All right, now trading always bears a risk of loss, so you need to be aware of all the risk involved before going ahead and do so. All right, now, so please be aware, all right, be aware of all the risks, take your own responsibilities. If you need to, seek some professional advice before you go ahead and place those trades, okay? All right, now, so let's go ahead without further ado. I want to keep this short and sweet, right, but the powerful, important messages do go out. Now, so bringing back the charts, what do we see now? Right? Anybody wants to leave a comment? What do you see on the charts? All right, we have that break. Now, is this break over here severe? No, it's not. All right, but we do have a break from the current uptrend, all right, that took us back, right, to the highs over here. So we hit the highs to form a double top, right? And what we have, all right, is kind of like a divergence happening in the market. All right, so this signals towards a weakness, all right, that's going to come about. All right, and we see it from yesterday, all right, and they're following through to today's market. All right, now, so what we have right now is a break of this support level, which is 463.55. All right, so now, all right, we expect the S&P 500, all right, from now until the end of the year to trade within this range. All right, now this range is from 464, right, to about 454. So that is still a 100-point range when we talk about the S&P 500. Okay, now, so that's a $10 on the SPY, right? But the SPY is 1/10 of the entire index, right? So we're still talking and looking at about 100-point range, which is not small. Yeah, okay, so from here, right, the market can actually continue falling off, right, to test the support at 454, which is 4,500 levels. Okay, now, and we may see it go all the way down before the year-end rally kicks in, right, to bring us higher again, right? Who knows? I don't know, right? But for right now, okay, we are having the after effect, right, of the Federal Reserve announcements, right? I'm not sure how many of you have traded the markets and how many of you have heard this before, right? But generally, right, after the Federal meeting, after the Federal meetings news does come out, right, and how the market reacts, the day after that, we'll always see a reversal, right? So after the Fed announced that they're planning to raise interest rates, right, market love it, all right, market love it. It charged it up before it closed. It went from a loss of that day to all the way up to a strong closing. Why? Because everything that was uncertain, everything that the Fed was not agreeing to do and staying, in that gray zone, right? They finally came out and say, okay, we're going to do something. We're going to control the inflation. So what the market had was a clear picture, right? And you must understand, all right, once the market has a clear picture, right, the traders know how to make their next move, right? So they love it, right? They love it, and that's why the market was bought up immediately, right? But then the next day, right, we always see a reversal, all right? Okay, why is there a reversal? I don't know, All right, maybe because, all right, many people missed out, all right, or there was a short covering. All right, many people were just too how do we say this? Too bearish, all right, on the fact that maybe the Fed Reserve is not going to do anything again. All right, okay, so that may cause the market to sell off. All right, but since they came out with the opposite, right, they actually said they're going to raise interest rates, right? So market charged up, and that may cause some short covering. Who knows? I don't know, right? But the fact was, it went up very strongly. Okay, but the next day, yesterday, we saw the market open slightly higher, right, before reversing and close lower, right, at the end of the day. All right, okay, so this is the long candle that we see over here, right? And there's a follow through, right, with actually a gap on the open, right? You don't very often see gaps, okay, but because the market is so high right now, and we have, those trillion-dollar companies, right, which are literally controlling the entire market, right? So if those stocks, those 5-6 stocks collectively gap, right, for their stock price on the open, right, you will actually start to see more of these gaps happening on the S&P 500, although it's an ETF stock, right? So it's just the dynamics of the markets and how it has changed. So what it has done before, or what it has not been capable of doing in the past, now is actually possible, right? So gaps are very rare, all right, when it comes to the S&P 500, all right, we would say 10 years ago, all right? But right now, the dynamics have changed. We have these $5 trillion companies that control, right, a large chunk of the market cap in the S&P 500. Right, so if they get down collectively, right, by 2-3%, you will see the S&P 500 get lower as well, which is what we see today. Yeah, okay. Now, so what do I expect out of the markets? I don't expect much. I do expect maybe some downside, right, but nothing severe. All right, nothing severe, because we believe, or at the moment, I still believe that the 4,550 level, right, is going to hold very strongly, at least until the end of the year. Right, and right, if this holds, right, we may start to see the buyers or the fund managers start loading up, right, on some of these stocks, which will in turn, right, stabilize the S&P 500 and turn it higher again. Yeah, all right. Now, but I don't expect markets to go charging another 100, 200 points higher. I don't really see that the market may end up making another, right, all-time high, right, because we had a couple of them, all right, but I don't really see there are reasons supporting this from actually happening, right, for the next 2 weeks. Okay, but okay, I don't see downside as well. So I really see a lot of channeling, all right, from now until probably the end of the year. Yeah, okay, all right. So that's the expectations today. All right, Susan, all right, could it be because, all right, the S&P is down today due to the dividend or the ex-div, right? Okay, now let's have a look. Now, so the S&P, all right, is paying ex-div today, right? But can you see the dividend is only $1.60, all right, Susan? All right, so you're saying, all right, that the stock, all right, is dropping, right, to the tune of $5. Can you see? All right, is now down by $5.40, just simply because they paid out a $1.60 dividend. Does that make sense? No, it's not. Yeah, all right. So again, collectively, all right, it's probably those trillion-dollar stocks, all right, which is causing this. As you can see, all right, Apple is down almost 1%. All right, let's look at Amazon. All right, Amazon is down 1%. All right, how about Google? All right, Google is down 1.5%. Remember what I said in the last session, with my members. All right, I did say Google, all right, has been stellar, all right, for the year. All right, they are one of the most resilient company or stock, right, for the entire year. Right, so many people think that Tesla is the stock of the year, but for me, it's Google. Why? Because Tesla has a much smaller market cap. It has a few hundred billion, right? I think $500, $600, $700 billion, and it has performed more than 100%, right? But when you talk about Google, right, we are talking about $2 trillion market cap company, right? And this $2 trillion market cap company, right, has returned more than 70%, right, for the year. Right, so can you see the magnitude that it has when it comes to the entire index? Right, okay, so it's not just about how it performed, right, but the entire cap of the company itself, right? Because if you look at it, it is actually easy for a small company, right, let's say $50 million company, to achieve a 200% return in a year. That's doable. Yeah, right? It's easy to push that stock in terms of price upwards. But if you want to push a $2 trillion company, right, up by 80%, do you know how much capital is needed in order to achieve that? Right, so in sheer magnitude, right, Google, right, is the stock or the S&P 500 stock of the year. That's for sure, right? But we're seeing it pummeled today, right? Okay, and that's why, you know, we are pretty much seeing it down, right? So Isaac, yes, you got it right. Okay, now, so another one would probably be NVIDIA, right? As you can see, NVIDIA is holding strong today. All right, that's good. Right, Tesla is holding strong as well. Okay, but you can see, right, the fangs, right? It is the fangs once again, right? Okay, Facebook, Meta, right? Meta seems okay. So what is it? Facebook, Amazon, Apple, NVIDIA, Google. Yes, Google. Yeah, all right. Now, so it's probably the main bulk of, oh, maybe it's because of this too. Yes, Microsoft. There we go. Right, Microsoft is down 2%. Yeah, okay. So it is these $3 trillion companies that is causing the market to pummel lower, right, or get down today. Microsoft, Apple, Google. All right, okay. That's many trillions we're talking about over there. Okay, now, so without further ado, let's get to the markets and let's get to our positions. All right, so what do I expect on the markets? Nothing much. All right, I pretty much expect it to be zoned, right, within the resistance and the support channel, which is 100 point difference over here. All right, okay, so it's about 100-point range that we're looking at. Okay, all right, give me a minute. Oops. All right, now, so let's get to our portfolios and let's have a look at what we have. We do start off with VZ, right? So we have a VZ call option that expires today, right, with a 55 strike. So let's quickly have a look at VZ right now. All right, it has gone up a little back to 52.50, right, but nothing to shout about. Valuations are still very low, right? And let's go. So we have a 17 December. All right, 55 call. So this is going to expire today, right? It's going to expire worthless. All right, so we can let it expire. All right, we can let this expire. All right, and do nothing with it. Yeah, all right, hang on for a minute. All right, so we can let it expire and do nothing with it. Okay, but come next week, all right, I'll probably add a new position. Right, so I'll probably go 1 month out, right, to the 21st of January. Right, and I'll be looking to sell the $55 call option. Right now. So if your account is actually huge enough, right, you can actually add this position today. Yeah, okay. But there is a risk. What is the risk? The risk is this. You are actually selling 2 call options which are naked now. Why? Because both of them, all right, are running. That means when you open the new strike today for the 21st of January, right, you have sold a 21st January expiry 55 call option. Right now, so that is, right, a liability, right, to give out the stock. Okay, then your current 17 December call options doesn't expire until market closes today. So that is still an open trade as well, which requires, right, or possibly, right, could need a stop if it is a sign. Right, so see now, so one of your positions is considered, right, a naked call option. Yeah, so that's how the platform will see it, right? So they will demand, all right, additional margins for that particular position. So this is where I say it. If your accounts are huge enough, right, you can actually stomach, right, this trade because you have the additional capital, right, to hold this position until the end of today, right? Because do I see that, you know, VZ is going to go above 55 by the end of today? The answer is no, right? Okay, but the position remains open. Right, so you know, if those of you have limited capital, this is something you can do. Right, you can pay, right, 2 cents. Right, you can pay 2 cents to close the 55 call that expires today. Right, and once this is closed, right, you can go ahead and sell, right, the 55 call option, right, for January, right, for about 34 cents. Okay, so that's what you can be doing over here. Right now, so I will just simply be selling, all right, an additional 3 contracts of this one, right, and I'll try it for 34 cents. Let's see if I can get it done. All right, so in my portfolio, I have 300 shares, so I will be selling 3 of these call options over here. All right, now, so let's go. Okay, as you can see over here, it's successfully done at 34 cents. All right, so I've sold the 55 call on VZ for January. All right, 3 contracts over here and collected 34 cents. Okay, now, so let's go VZ. All right, this one is still not 0 for me. All right, but I will copy this. All right, and then this one will be the 21st of January. Right, 55 call. I'm doing it today on the 18th or 17th of December, right? And we pocketed 34 cents, right? So you can see we actually ended up collecting another set of premiums, right? Which is more than the last month itself. So it's not too bad, right? It's going to pay me an additional $102 while I wait, right, for VZ stock to go back above 55. Right, can you see now? So I'm getting myself paid while waiting for the stock to recover itself, right? And that's perfectly fine for me. It's more cash flow. It's in fact worth another $102. So why not? Okay, so I've added that. I've just added an additional $102 in cash flow for my portfolio this week. All right, so let's move to the next stock, Rio. All right, so we have Rio as well. All right, let's look at Rio and what can we do? Right, so Rio has bounced up a little bit. All right, it's back up to 65. Right, but however, our break-even price, right, is about $75. Right, it's about $75. Right, so I believe for this we can only still hold on to the stock. All right, but who knows? Oh, this is not too bad. Right, our break-even price on the share is about 75. So I believe we can go ahead and try to sell this one for about 30 cents today. Right, because we are waiting for about another month, right? And you know, if our stock get assigned, we would sell the stock for $74.72. I think that's pretty decent over here, right? Because it's close enough, right, to our break-even price for the stock, right? And it will allow us to collect a 30-cent premium on our trade position, right? So I see no harm, right, in adding this cash, in adding this cash to the portfolio. All right, so let me go prepare the order. All right, so I'll be selling 3 of them for my 300 shares. All right, I'll be doing this for 30 cents. All right, my order is submitted at 30 cents over here. All right, still not taken. All right, so let's see if it'll get done. Okay, now, so we'll go ahead with our next move over here. What's the reason you sell covered call? Bonnie. All right, Bonnie, you're probably new with us. All right, okay, Bonnie, so you're probably new with us. So let me explain. All right, Bonnie, because as part of our portfolio, we are selling cash secured put options in this Friday public session. Right, so in this session, I cater to the general public, right, to show you how you can build a portfolio, right, just simply selling options and still achieve a double-digit return, right, and on an annual basis. So our strategy of choice, right, is to start the trade by selling a cash secured put, right? But for VZ, right, we actually ended up getting assigned, all right? Okay, we were assigned the stock itself, all right? And after that, all right, we were selling call options against the stock that is now sitting inside our trading account. Yeah, okay, to continue to generate more cash flow, right? So this is now called the covered call, as you're seeing right now, right? So Bonnie, in short, it is because we now own the stock, right? So we are collecting more cash, right, while waiting, right, for the stock price to recover. Okay, all right. Now EL, right? What do I think about ADBE? I don't think about anything at all, right? Why? Because it's a high flying stock. All right, and right now markets are still very expensive, right? So why would I want to buy into a very high flying stock when I do believe that after the 31st December, right, there will be more of a real correction that needs to take place in the market, right? Okay, so I look from things from a simple, right, fundamental angle, whether it makes logical sense to get into this company based on what it has already done, all right, and then what's to expect out of the entire market. Right? Will it support the idea or it doesn't support the idea at all? Yeah. Okay. All right. So for the rationale over here, the odds are not stacking against ADBE. So no, the answer is no. Yeah. All right. Now, so That's where we go. All right, now, so if you look at it over here, it seems like it's been punished very heavily, right? As you can see, 699 to 547, right? But if you look at the stock, it is still trading at a 45 times PE. Now, how big is Adobe? Do you think, all right, it can still grow at 45 times its earnings, right? If it doesn't, then you need to be considering, right? Why? Because valuations still point that it's expensive. Yeah, all right. If it's expensive and the market corrects, that means it can get hell a lot cheaper. All right. Okay, hell a lot cheaper. So this is like the opposite of what we have in our Intel trade, right? Why did we get into Intel? Right? Because it was cheap, right? It was hated, right? It was unwanted, but it's profitable. Yeah. Okay. All right. Now, so we see very little downside, right? Because anyone who needs to sell have already probably sold. Yeah. Okay, so it's a slightly different rationale. So my real trade is out there. Okay, now let's quickly go to HIMX. So same thing as VZ, we have HIMX on a $12 call, right, that expires tonight, right, tonight. Right now, so let's see where HIMX is. Okay, it's 11.79, so it's close enough. All right, now, so we'll expect to pay, right, to get this $12 call option closed. Right, it's pretty expensive. It's like 10 cents, right? Okay, now, so what I'm going to do is this. So unlike VZ, right, I'm not going to sell another call options until next week. All right, I'm going to see if this one expires or this one will end up taking away my share. Right, because if it takes away my share, the trade ends. I still made a profit, right? But if it doesn't, right, come next week, we will look for the next call option to sell so that we can collect another set of premiums. Okay, all right, now, so this one is handled slightly differently. Okay, all right, now, next one, we have Intel. Right now, Intel also expires today, interestingly. All right, so we have Intel that expires at 52.50 puts. All right, where do we have it today? We have it at about 205. So about we can close this today, all right, because we collected 210. All right, so let's go ahead and close this. All right, we'll pay 208. Right, I believe 208 will get you filled. 209 is fine as well. All right, okay, so let's go record this. We have like the break even, right? Okay, 208, 209. All right, so after commissions, we probably made nothing. All right, but we did close this trade, all right, for a break even. Right, even though the stock went down. Okay, and what we're gonna do is this. All right, I'm just gonna close this trade. All right, free up this. All right, and today we're gonna go ahead and add one back. Okay, so I'm gonna continue a trade on Intel. All right, we'll look at this together after all our management actions. Okay, there is no rush, but this is definitely one trade. All right, that I'm gonna be adding today. All right, now next one. Let's quickly go. All right, CPB. All right, so we have CPB as well, which expires today. It's expiry day. All right, let's go. All right, CPB. Up banner. All right, thank you very much. All right, there we go. All right, Eileen, HIMX is already assigned. Yes, you're right. All right, but I sold the call options. Yeah, all right, Eileen, so it's different trade. All right, the put options that we sold turn into shares. So I'm selling call options on the shares that I own. Okay, now Campbell Soup, this is going to expire worthless tonight. So no actions need to be taken. Right, our put strike is at $40. Right, our put strike is at $40. Right, so the stock right now is trading at almost 44. All right, so it's a very boring stock. So I don't see it dropping $4 by the time market closes. So this is going to be a definite winner. Right, at 17th of December, right, and this is gonna free up the margins. Okay, now so we made $220, right, and another winning trade. Yes, right, another winner. All right, now so WU. All right, let's go. All right, we do have some stocks which we will end up taking the delivery. All right, so not all. All right, it's gonna turn out as well. All right, so let's go to WU. Right, so WU is at $18. Oh, yes, nice. Right, so $18 put, right, can be closed today by paying 5 cents. Right, so of course, I'm going to go ahead and pay 5 cents to get this closed today. Why not, right? Okay, let me do this. WU. All right, now, so if you have this trade, if you have this position, go ahead, all right, pay 5 cents and get this trade closed today, okay? All right, everyone, all right, pay 5 cents and get this trade closed today. Okay, so let's record this down, all right, 5 cents, all right, $228 in cash flow, all right, I closed this on the 17th of December, right, frees up the portfolio, $228, another winning trade, all right, awesome. Right, but this also means, right, the stock didn't really go anywhere, right? So I can probably add another set later today. Right, so this will be trade 81 today. All right, we'll have a look at what we'll sell later on, okay? All right, now, so I don't know yet. All right, now, next trade that we have, Hog. All right, so Hog also expires tonight. We have a 36 put. All right, let's have a look at it. Harley Davidson. All right, 36 puts. Let's go. All right, so we have a 36 put over here. All right, we can probably pay about 10 to 15 cents to get it closed today. All right, so I'm going to go on the higher side. Let's go. Let's see. Hog. 36 puts. Let's see if we can close it. All right, how much do I need to pay? All right, buy. Uh, 10 doesn't cut it. Let's try 15. All right, now how much did I collect? I collected 91 cents. All right, so here's what I'm going to do, everyone. All right, I've just paid 20 cents to get it closed. I don't even want to negotiate. All right, hang on. All right, now, so my order just got filled over here. All right, I've got Hog December 17, 36 puts. I just bought 3 of those put options back for 20 cents. All right, so it's officially closed. All right, I paid 20 cents and the trade is now closed. So let's go ahead and record it. Another winner. Woo. All right, 20 cents, 17th of December. Right, we are unloading our portfolio. A lot of the trades are getting out. Right, I may add Hog back in as well. So let's have a look. Okay, now we have TUP, which expires tonight as well. All right, we have tons of trades. All right, now let's go TUP. All right, Eileen, I already said this just now. All right, Eileen, so we will wait for next week before we sell the next set. All right. If you want to know why, all right, please watch back once this session is over. Okay. All right. Because I did detail why we're handling this differently from the VZ trade. Okay. All right. Now, so TUP, all right, 16 today is at 1460. So I'm going to take delivery of this stock by the end of today's session. All right. So we do need to take delivery of one stock today. That's going to be TUP. All right. So this is going to be ending up as the stocks today, all right, with no expiry dates, no assignments, 17 December, right, $16. Yeah, all right, no cash flow. Okay. Equals to 16 times 3. Right, but it's not 3, but it's 300 shares. All right, now, so this is how I enter my details. The put options is going to expire by the end of today, right? It's going to turn 0, but we'll end up buying the shares instead, all right? So the $198 cash flow is definitely ours, right? But the whole trade is still sitting on paper losses, okay? All right, it's still sitting on paper losses. Okay, All right, now, so that is done. We'll take delivery by the end of today's session. Next one. All right, let's go to EAT. Nothing needs to be done, all right, on my portfolio for this one. All right, now, next one, EAT. $34.90, right? 35, close enough. All right, now, so this one expires today. We collected 76 cents. We can pay 40 cents today and get it closed. So I'm going to do that. All right, pay 40 cents and get it closed today. All right, now, so it only bite me at 45, so I close it at 45 over here. Okay, all right, so I paid 45 cents. My order is done. Okay, all right, so my order is done over here. Okay, EAT, December 17, 35 puts. I bought 3, all right, for 45 cents. So that is done. All right, so let's go ahead and record this down. It is still a profitable trade. All right, awesome. So see why I keep mentioning that there is not much to worry about, right? As long as the stock is fundamentally undervalued, right? Because we know exactly what we're doing, right? So today I can potentially add back quite a couple of stocks actually. All right, I'll decide how many I want to add back today. 82, 83. All right, this is done. This is closed. Right, and another profitable trade. CAG. CAG doesn't expire to January, but I think it's gone up quite a bit. Right, so let's go ahead and see where profits to close out. All right, CAG, $34. That's a good trade. I think we can close it. This one, 21st January. Right, $30 puts. Okay, now, so we can pay, right, about 12 to 15 cents to get this closed today. All right, so I'm going to do that as well. Okay, I'm going to do that. All right, hang on. All right, let me just go ahead, find the trade, close it out. All right, CAG. All right, buy 3 contracts. Okay, we do have quite a bit to go through, so I'm not going to waste much time. I'm just going to get it closed. All right, there we go. All right, I closed it at 14 cents. I bought 3 of the January CAG, right, for 14 cents. So I paid 14 cents and this trade is closed. Okay, so let's record it down. All right, this trade was only open on 13th of December. So it's a good trade over here. All right, we closed it for a good profit, way ahead of expiry date. All right, wow. I've unloaded my portfolio officially. All right, look at how little money is tied up right now. Just in time for Christmas. Okay, we are done. All right, now, so we are done with the portfolio action. All right, Facebook user. All right, I believe it's Andy, right? Okay. If you're going to close it at 10 cents, that's perfectly fine. Okay. All right, now, so I'll leave it to you. All right, why? Because I prefer to close the trade and then reopen, all right, because I don't need to take assignment. All right, so now let's go back to our new trade, shall we? All right, so new trades. Intel, let's start off with Intel. All right, I still like Intel very much. So here's what I'm going to do. I'm going to sell the 21st January. All right, 21st January, 47.50. All right, put option. All right, so that's what I'm going to do. Okay, so I'm going to sell 3 of that today. Okay, I'm going to do this. Okay, we're done. All right, so very quickly, I've reloaded Intel to the portfolio. I've sold 3 again, all right? I've taken 70 cents. Okay, so I've sold 3, I've taken 70 cents off it. All right, now, so before I key that in, let's do it, 21st January. Okay, 47.5. I did this today and I collected 70 cents. Okay, now, so how much is the margin requirement gonna be? It's gonna cost me 14,250 if you're gonna sell 3 options. By right, all of you can start off with just one, okay? So you can sell 1 put option and that works as well, right? But be prepared to set aside $4,750 to pick up 100 shares. Okay, that's based on this public session and how we execute the strategy. Now, if you want to do the same kind of trades, okay, and protect yourself on the downside and also start off the trade with a capital of as little as 200 US dollars, right? Join one of our mentorship programs to find out what we do and how we really do it. Because if you can invest with much smaller capital requirements, right, naturally your returns is going to go up. Right? We didn't change the stock. We didn't even change the trade, right? But we can yield a much bigger return by being a more experienced option seller, right? So our mentorship programs cover this aspect and these strategies, right? So do send my team an email, right, if you're interested, right, to find out more, okay? Right? Or leave a comment inside this live session, right, so that my team can get in touch with you, okay? All right, now, so whichever way you like it. So I've added Intel back. Let's go to WU. Right, let's look at WU together right now. Right, so the last time around we sold these 17 puts. How much did we collect the last time? We collected 81 cents for the 18 puts. It's not too bad. All right, let's do it again. All right, so I'm going to sell the 18 puts again, all right, for 60. Let's see what I'm going to do. Right, it's essentially the same trade, right? But I'm just extending the deadline because I closed the first one for a profit, right? So I'm reloading again. Now, let's see how much I can get for this one today. Right. Why am I going to do this at 60? Okay. All right. Now I've submitted an order to queue for 62 cents. All right. So it is not done yet. So my trade is not officially open. Right. So if it does get filled, I will update it in this live session after it is over. Okay. I will send an update in a comment. Okay. But right now it's still on queue. Okay. Let's go to Tupperware. All right. So some of you say you rather take the shares. I leave that decision to you. Okay. But what I'll do is I'll actually go back. All right. 16 puts. Right. Oh, no, Tupperware is the one that we have to take the stock. Yes, sorry, my apologies. All right, so I'm actually going to end up taking the stock. So no reloading on this one. I apologize. Oh, it was reloading EAT. Okay, now, yes, Hog. All right, I can go back to Hog. Let's have a look at Hog. Right, we sold a 36 put the last time around, all right, and it's still around there. I think we can do this. All right, let's sell the 35 puts today. All right, I still think it's undervalued. All right, so I'm going for it. Oh. $35 puts. All right, markets are down today, so I'm not going to be in a rush to reload everything because I do have quite a bit. All right, so let's see what I can get. 10. Okay, now I sent my order at 108. Okay, but it's not biting yet. Right, as you can see, my order is there, but it's not taken. All right, but I've sent it in to sell 3 put options for hog, right, at 108. Okay, all right, 108. Let's have a look. All right, now, so I've changed my mind over here. All right, let's go, everyone. All right, hang on. Just some security settings. Okay, all right, now, so this is done. All right, now, so I just resold the hog 35 puts for January, right, and collected 105. All right, 105. All right, so I just got done on it. 105, let's go. All right, where's my hog? That's after Intel. All right, 81. 21st January, 35 puts. In December, we collected $1.05. All right, awesome. Nope. Nope. So this trade, by selling 300 3 option contracts, okay, I need a capital of $10,500, right? Just in case I need to buy 300 shares of hog by paying $35, right? So that's the capital that I'm setting aside over here, okay? All right, so that's the capital I'm setting aside. Okay. Susan, no. All right, no. Okay, so for your question on Rio over here, no. All right, we have to stick to the 74 strike over here. Why? Because that's the cost of what we paid for the shares. Okay, so I'm not going to amend that one. Okay, so I'm on, yes, I'm on Q, right, for 30 cents right now. I'm just going to leave it, right? If I can't get it, I'll just, try again another day. Yeah, it's 30 cents or $30 after all, right? I don't really want to go much lower. Yeah. All right, hog is done. All right, let's go to WU. Oh, man. Here we go. Okay, WU, right, 18 puts, right? We did 18 the last time around as well. Oh, yes, I've already queued for it. Yes, my apologies. Right, there's too many trades going on. All right, I've queued for it. Right, it is not done. So I'm just going to put a queue over here. Right, it is not done yet, so we can't record it down. Right, but this one is also a 21st January, right, 18 put. Okay, all right, my order is at 62 cents. Okay, it's not filled yet. Oh, it's filled. I've got it filled. I've just realized it. All right, my apologies. All right, WU sold 3 over here at 62 cents. All right, this is a trade. It got done and it got filled. Okay, all right, so let's go ahead and put it down. So this is going to be trade 82. Okay, everyone. Right now, how much is this going to cost? 5,004. Right, it's going to be a much cheaper trade over here. 5,004. Okay, all right, now. EL, all right, I'll leave it to you because, like I said again, all right, if you want to find out how you can do this with much smaller capital, all right, consider being one of our members, all right, in our community, all right, or take up one of our mentorship programs. Okay, I can't cover it here in the public session because I won't be able to cover the right strategies in full details. All right, okay, now, so our approach in this public session will be portfolio puts, right, or cash secured puts. All right, so that's the only strategy we're going to discuss in this public session. I hope you understand that. Okay, now, so without further ado, let's go to our next stock, which is EAT. Right, EAT. Yep, Andy. All right, it wasn't entered yet, so I've already changed it. EAT. I think we can go back to the same strike as well. Yep, we can. Oh, but it's very rich. We only collected 76 cents the last time. All right, let's go down to 32. Why not? All right, let's go down to 32. All right, let's go to 32. All right, let's do this. Wow. It's a cash day. I love these days. All right, now how much can I get for it? 32, 32, 1. Let's try. All right, I'm trying my order for 110 because that's the last done price. All right, it's not taken yet, so I'm going to leave it in the system, okay? All right, so I'm officially trying it at a 110. All right, so this is still a queue order, right? It is not filled yet, so I can't label it officially. Okay, our strike is 32, 21st January. So if this adds up, all right, it's gonna cost me another 9,600. Okay, now so that will put my portfolio back to almost fully exposed. Whoa, all right, I closed some and I got back in some. Ugh. I wanted to add another trade. Can I do it? Let me see. All right. I wanted to add a new trade today, a new stock. All right, let's go have a look at it. All right, is it possible? All right, ANF. Yes, I'm going fishing. All right, I'm going fishing. All right, Abercrombie and Fitch. Yes, I am going retail. Why retail? Because same thing, right? It's beaten down, it's hated, it's unloved, right? But it is still a company that is making money. All right, look, it's a company that's still profitable. Yes, profits dropped, right? But it is still making money. Yeah, okay, and that's what I love about it. All right, now it's cheap, 7.4. All right, so I'm going for a trade to collect some cash flow. All right, so 33. I think we can go 30 even. All right, now, so let's go with 30. Right now, because my portfolio is a little bit stretched, so here's what I'm going to do. For this trade, I'm only going to enter 2 contracts, okay? Right, because of the capital that I'm already up to. Right, 1. Okay, now, so I'm attempting to sell this at $1. All right, so it's not appearing yet, but I've sent it. All right, it should appear. Yeah, there you go. All right, so that's my price over here at $1. All right, so if it gets taken, all good. Okay. All right, EAT, I've got it done. All right, was that still working just now? Yes, it's done now. Right, so see why I said don't rush for your prices. Sometimes you can leave and wait. Right, so my EAT just got done at 110. Oh, there you go. ANF, $1. All right, I just got both done over here. All right, so let's put everything down. Wow, it's a cash flow day. All right, we closed many trades and reopened 5 trades today. All right, we reopened 5 trades today, everyone. What a crazy day. Crazy in a good way, of course. All right, $1. Right, look, we pocketed a further 3, 3, 3, 9, 9, 2, and 2. All right, so that's another 4. We pocketed $1,300 in cash flow today, all right, on this portfolio. All right, and my portfolio now it's almost fully exposed. Right, the portfolio is worth. Oh no, this is wrong. This is my total P&L. Why is it wrong? There you go. This is why it's wrong. All right, so the total portfolio right now it's up about 20,000. All right, so starting at 100,000, so the portfolio has a total cash of about 120,000 now. So I'm invested about 97% of what the portfolio is worth. All right, so markets are at the top. Right, markets I do expect them to correct, but it doesn't mean that I'm not fully loaded. I can still do that. Yeah, okay, I can still do that. Yeah. Okay. All right. Awesome. Now, so EL, yes, I know you have attended. Okay, but I can't discuss the strategies here. All right. So based on what you have learned, all right, you can go ahead and execute the strategies, right, in your understanding. Okay, but I won't be, I can't discuss it here. Yeah. Okay. All right. Now, so do your own adjustments, find the trades based on the rules, right, that was given out to you, right, and then if the trade makes sense, right, go ahead and fire it off, right, because you know the sell strikes that we have taken over here, right. So all that matters now is if you can find the trade, right, that gets you the returns, right, that you're after. Okay, Yel. All right. Now, thank you very much. But if you want to find the exact trades that we are doing over here, right, you can join us in our live trading sessions, which we do every single week. Right, that may be something of interest to you. Right now, so if you want to find out exact trade details, which I send out every single week to all our members, and they see me trade it live as well, right? The exact strategies, the exact orders, the exact profits, and even exactly when we get out, right? That will be something you might be wanting to consider, okay? All right, now TUP, Desmond, TUP, we are taking the assignment when the stock expires today or when the option expires today. All right, so as you see, I already keyed it in. Yeah, okay, so the stock will be assigned today, right, for the options. Okay, so I'm just going to leave it to expire, and then I'm going to end up getting the stock next week, all right, and then sell call options on it if it's possible. Okay, yes, you're right, Jimmy, it's Christmas shopping. Yeah, all right, we just pocketed over $1,300 in cash flow today on our new 3 stocks. Okay, Desmond, you can't, all right, you can't go for the call option now because you haven't got the stock yet. All right, so you need to wait for next week. All right, so we'll wait for next week and then we'll start adding. Okay, Desmond? All right, we're done, everyone. All right, we have added 5 trades back. Shall we do a quick calculations of all the ROIs involved? All right, so this one, all right, Intel, we were making 70 cents on an investment of $47.50. So this trade pays a $1.47. Okay, now, and this is about 35 days. 35 days will make it what? 6 weeks or 5 weeks? 5 weeks. All right, so this is a 5-week trade. So I'll divide it by 5 weeks and then annualize it. A 15.33% return, right? Nothing to shout about, but we do have quite a bit of safety. The stock is trading at $50 right now. So I think that's not too bad. Right now, how about the next trade? 105 divided by $35. There we go, 31%. So can you see how it, we give and take a little bit and we'll still achieve that 20% return by the end of that year, right? Because some trades we aim for higher return, some trades we get slightly below, right? But it all balances out, okay? All right, now, so this one pays me a 3% return in 5 weeks, right? Or a 31% return annualized, okay? That's for Hog, right? Let's go to Western Union. All right, Western Union, 62 cents divided by $18. All right, that's a 3.44, 35% return annualized. Again, this is above the mark. All right, so we have some pretty good returns over here today. All right, now next one, EAT, 110 divided by $32, 3.44, 35% again. Awesome. All right, now, and then the last one, $1 divided by 30. 3.33. Wow. So the average annualized return of the 5 trades that we have executed of today, right, is still right above 20%. I think it's around 25, 27% range on an average. So see, we're still on the mark to achieving our 20% returns. Yeah. Okay. All right. So that's not too bad after all. All right. Now, so let's keep going. All right. Let's see where we will end up with. All right. By the end of the second year. All right. Now, so that sums up today's session. Wow. Right, it is intense. We ran into almost an hour, right? But we did quite a lot of things over here. Now, I do hope all of you have benefited from the portfolio actions today. I made up for last week. I took a break today. I paid it back. All right, now, so thank you very much for being with me once again here in this live session today. All right, I do hope that you have liked it. I do hope that you have benefited from it as well. Right, and if you found it beneficial, if you have followed some of the trades, you like it, you found it useful to you, please remember to help me click the share button and the like button before you go off and log off today's session. Okay, all right, do that. Help us, get visible on the Facebook algorithms, get it out to more people, let them know what we're doing, right, on a week-to-week basis. All right, and then, okay, thank you very much for being here together with me. I'll see all of you next week again, Friday night. Okay. All right. See all of you next week, Friday night, everyone. Wait a minute. Next Friday is Christmas. Is that it? It's Christmas Eve. It's Christmas Eve. Oh my goodness. All right, now let's see, okay? All right, now I can't promise you, because if I will be somewhere and engage with the family, all right, I will send out a post to say that we'll call it off, okay? All right, I hope you understand, all right? It is Christmas Eve after all, right? But if there are no plans because of the new normal, right, I'm more than happy to run a session, right? So stay tuned, right? I will be updating in the Facebook group, okay, everyone? Right now, so thank you very much, and I'll see all of you, because the following Friday is New Year's Eve. All right, now, so if I'm not going to run another session before the end of the year, I'll see all of you in 2022, okay? All right, now, thank you very much for joining me on every Friday night, okay? And see all of you really, really soon. All right, take care. Have a great weekend, everyone. Bye for now.